What's going on, guys? Welcome back to Lunar Beats Crypto, where we ride the waves of the crypto market. This is part 2 of a video series that I am recording, obviously. And this will be going a little bit more in depth on market structure, looking at pullbacks versus reversals. Before we get into that, let's go over to this chart and let's just do a little bit of refresher from video 1 where we went over just basic market structure. Now before we draw anything, I just want you to look at this chart and I want you to see if you see the market structure on this chart. Higher highs, higher lows. You can see that we are clearly in an uptrend, moving to the upside, right? But what counts as our highs and lows? So just to refresh, we'll start here at the low. We'll go to this high before this pullback. Okay. Then we're going to go to this high before this pullback. This high, this pullback, all the way up to this high. Now, why did I not count anything in the middle here? Because this is your higher time frame trend, okay? So you can have all the little stuff on the inside that your heart desires, but what matters is the overall higher time frame trend. Right now we're on the 15-minute. This is going to be more hourly, 1 hour trend. Now, when we are looking at price action like this, you have to consider that high time frame trend. Because although it is true that on the lower time frames, higher highs, higher lows, higher highs and higher lows, we do see a break of these internal, if you will, swing levels. And this will trip up a lot of traders thinking that this is a reversal. However, what's important is that high time frame swing level. So this is our invalidation zone. If price were to come down and close below this zone, then we would look for a pullback and probable, because everything in trading and charts and all this stuff, all of it is probabilistic. None of it is 100% guaranteed. I just want you to know that. Also, none of this is financial advice. It's all educational content. I didn't put that in my first video. Should probably do that, even though it says it right there. So yeah, this is what would probably happen probabilistically if you were to break and close below this low. Don't really care if we wick below it. A close below is what we need. Now this would trip up a lot of traders because they're looking at internal levels and not the major swing levels. And if I just go ahead and play, you can see this actually ends up continuing the trend to the upside. And there you go. It's going to come up, it's going to break the trend, and we get a continuation of this trend. In future videos, we will go over why price stopped here, and we saw a continuation of the trend. The main point being we had liquidity sitting here in a fair value gap, came back down to that, and then you get the reversal and trend continuation. Now, coming over here to my next slide, if you will, if I can even find it. See, this is what happens. You do prep work, and then the prep work doesn't even want to work. What happened to all my stuff? Ah, there it is. So, what I like to look for is what's called a market structure shift. It's in the name. It's a shift in your market structure. This is how we can mark potential reversals. So if I'm seeing price move to the downside, you get a bounce, and then you move to the downside, take out this low, you create a new low, and you come down, you sweep that low, and then you push to the upside. Is the reversal in? No. The reversal is not in. We did not take out these significant highs over here until this level right here, until this push right here. And we got a candle body close above these levels. So that's what we look for when we are looking for trend reversals. A lot of times we'll look for just this internal close above. You pull back to it, you hold it that level, and then you get continuation. This would be more prime for a scalp long than a long-term hold or a intraday long. Mostly because, yeah, I mean, we did take out this level. Also, we took out this level, and we took out this level, and that's all well and good. But the main levels that we need to take out is this last swing level. So I'm going to pull that across. Okay, so we take that out. We'd fail to reclaim it. We fail to reclaim that level initially. Then we get the big break above, and then we get a pullback to that level. Now, it is on this back is where I will look for trend continuation. And that's the key, is looking for those key levels. Let's just do this here, here, break of that key swing level, and then a pull back to it and a hold. You can scalp that long there, or you can hold it for higher prices. I wouldn't, because you also have to look at the overall trend and see where you are within the overall trend. What are we doing? We are pushing to the downside. What's the next major swing level? This high, these highs right here. If we don't close, if we don't break and close above that on the hourly, on the higher time frame, because this is a high time frame swing level, then we don't care. We don't care about it. We don't care about any of this. And look, once you come up and you fail to even come up and break this, what do you get? Downside. And then you get a true reversal and continuation. Now, if we zoom out even further, you can see this ends up going all the way up here. You get your break above these highs. Great. What about this high? What do we do at this high? Do we get to it? Do we get a breakout, continuation? We sweep it. Sweep is when you just get a quick move above, and then you fall right back down into the previous range. Sweep above, sweep below. It's the same concept. Then you come down, you break this swing level. And now we are thinking about continuation to the downside, and that is exactly what we get. So this is why understanding market structure is so important when it comes to trading. Understanding what counts as a reversal, what counts as continuation, and why. This is what matters before you look at anything else, before you pull a Fibonacci tool, before you look at VWAP, before you look at any of your indicators that you use or want to use. You've got to understand market structure and what is happening with price, both on a higher time frame level and a lower time frame level. But that's pretty much it for this video. I'll see you guys in the next one. If you wouldn't mind hitting that like and subscribe and sharing with some friends or something that are trying to learn how to trade. So hope you're enjoying the series. Stay tuned for the next one. I'll see you guys then in that one. Mad love. Peace out. Ride the waves. Bye.